no disincentive to keep on drilling, and the more we drill, the more we find, and we're confident that that'll be replicated at Marilla.
Well, hello and welcome to Assay TV. Today I'm delighted to be joined by Mike Anderson, who is the Managing Director of Firefinch Limited, an ASX-listed company focused on two projects in Mali, a gold project and a lithium project. Mike, great to see you today. If we could start things off, Firefinch Limited is a fairly new company. Could you give us a little bit of a background to how the company came about?
Well, it's a new name. Firefinch is a new name that was put in play when we did acquire Marilla late last year. But the company has been around for 9 or 10 years, operating in Mali, originally as Morila Gold, and then more recently as Morila Lithium. But with the acquisition, as I say, brought about the change of a name, quite a nice name. Firefinch is the national bird of Mali. So we certainly look to give flight to Marilla again, and so far so good, off to a pretty good start.
So let's talk about Marilla and tell us a little bit about what you've got there, the background to the acquisition of the project, and also your progress towards ramping up production on that project.
Obviously, I did speak about Morila Gold and Morila Lithium, and they've been operating in the country for 9 years. In fact, as a near neighbour of Marilla, and historically, Morila actually transacted on a couple of small satellite deposits with Marilla when it was in operation. So there was some prior history there, as I say. The acquisition completed in October, November, though, gave us full ownership of a mine that has a fantastic track record. Marilla was commissioned back in the early 2000s by Randgold and Anglo. Of course, Randgold ultimately taken over by Barrick. But its early days were very prolific. It had a year of producing over 1 million ounces, and to date has produced over 7.5 million ounces. We have then got about 2.5 million ounces in resource of our own, 1 million ounces in reserve, which sets the stall out for a 7 to 10 year mine life that we talked about in our life of mine plan release in early May. But absolutely convinced that's not the end of it. And we have to dewater the pits to access what we believe is remaining there. And once we do, there's a lot of drilling to be done to optimize the early mine schedule and to fully test Marilla's remaining upside, of which we're convinced there's plenty. So very exciting, given what we acquired this for, the mine, the processing facility, the workforce, all for less than $30 million. It has been recognized by many as a pretty compelling transaction, and up to us to put the flesh on the bones now, working towards that production profile that we see ahead of up to 150, 200,000 ounces per annum again.
I see you've been doing a sort of staged ramp up of production. You started off going through some old tailings and then doing some free dig at some of the satellite pits, and then very recently you've been doing your first blasting in the main pit.
Yeah, so that blast was in what we call Marilla Pit 5, literally on the flank of the Marilla Super Pit. So arguably, we've called it a satellite. Arguably, it is just part of the main Marilla ore body. Next steps will be to start targeting the satellite deposits, Viper and Inchola, until we get into the heart of Marilla proper through that dewatering. They will be the mainstay of production. We'll probably get back into Marilla in about 9 to 12 months' time. And the grades and the proximity to the mill drive that as the compelling proposition. But the satellites are quite material for us. And look, everything we've been doing since acquiring this has gone extremely well. The recommissioning of mining, the refurbishment of the crushing and the milling circuit, the recommencement of blasting. Now, all just small steps along the way. And we put out our June quarter production results, and everything's trending in the right direction. Grades are up, recoveries are up, production's up, and it is just the start. But in hopefully 12 months' time, we'll be back producing prolifically above 120,000 ounces per annum.
And your June production results, how many ounces were you producing, and what is your target for the rest of the year?
We produced just over 12,500 ounces for the June quarter, with over 5,000 ounces in June. So, those numbers easily to annualize. 12.5 is exactly 50,000 per annum, but 5,000 a month get you closer to 60. We're playing a bit of catch up. We produced about 10,000 ounces in the first quarter of the year when we were solely treating tailings. But every time we take a step forward in terms of the mining, with the satellites and the grade ticks up. It all just speaks to better recoveries and better production numbers. And that will continue once we get into Viper, and ultimately, as I say, that ultimate prize of getting back into Marilla proper, where our current resource reserve grade's about 1.5 grams. Convinced that once we get some more drilling under our belt, we can build on that. And the old adage, grade is king. If you're putting the same tons through the mill at better grade, so much more to your bottom line. And I think that Marilla has a lot more to give up here.
And in terms of exploration potential and building your resources, you've been doing some work, I believe, at Viper.
Yeah, so all the satellites have had a pretty decent hit out in the few months that we've owned since we've acquired Marilla, and we've taken the ounces there from about 120,000 to 220,000, and I think that's a telling precedent in that this is a very prolific belt, a lot of untested potential, and we're working hard with Capital Drilling, our partner there. And I spent some time with them when we were on site in early June, and they certainly see the potential and the prospectivity, and no disincentive to keep on drilling. And the more we drill, the more we find, and we're confident that that'll be replicated at Marilla.
And in terms of cash to pay for all of this, a recent fundraising, I think you raised 47 million. Who was getting involved with that, and what are you planning to do with those funds?
Yeah, well, look, that was an important raising for us to continue the momentum. We have got drilling to complete, we've got pre-stripping to complete, and the dewatering of Marilla to complete. So it's all working capital related to continue at momentum and to sustain the company. And we'll talk about Goulamina in a minute, but there's some working capital requirements there as we work towards the demerger of lithium company. But very well supported by Macquarie, who led the raise and jointly with Euroz Hartleys. We had Canaccord involved, we had Petra Capital involved, and then from an overseas perspective, we had Jet Capital, and we were advised by Sprott. So I think that led to a very healthy interest from international institutions and indeed domestic institutions. We had as many as 20 new institutional shareholders come onto the register, which certainly was pleasing from the board's perspective as we look to grow and take ourselves to the next level of relevance to the international investment community. That was a very good sign. So those funds, as I say, will be deployed to carry on with this strategy, and all with the ultimate aim of getting back into Marilla as soon as possible, because that's where the value is.
Absolutely. Let's talk a little bit about Goulamina now, your lithium project there in Mali. Tell us a little bit about the resources there. You've done a definitive feasibility study on that project, and also you've done a joint venture with Ganfeng, or that's coming along, for them to help develop the project. Tell us a little bit about Goulamina.
Well, Goulamina was the subject of a feasibility study in the very profoundly named Mali Lithium. Not much question mark about where the company was based or what it was focused on when that was underway. And so that feasibility was put on the shelf late last year, at or around the same time that we were completing the Marilla acquisition. And look, it's fair to say that the sentiment in the lithium space at that time wasn't quite as buoyant as it is today, notwithstanding that this is a world-class resource. We've got a 23-year mine life defined there, very healthy grades, very healthy, clean purity of concentrate, and shaping to produce 460,000 tons of spodumene concentrate annually, which certainly compares quite favorably to its peers. But we weren't in a position to take it forward ourselves. It had a capital cost estimate of just under $200 million US, 194. And so we having established the focus on Marilla, the board strategized to talk about demerging these businesses, and that was in place before I took on this role. But it was certainly a strategy that I'm comfortable with and that I fully support. And the next step in that was to then appoint an advisor, and we chose Macquarie. I think that was a very good choice. They're very experienced in the lithium space, been around a number of recent deals, and fair play to them. We mandated them in early March, and we concluded that the binding joint venture, a transaction with Ganfeng in mid-June. So 3.5 months is a pretty impressive time frame to have executed that deal. And the 194 million that speaks to the investment that they shape to make obviously goes towards the development of the project. 130 in capital, and up to 64 in debt. We'll take our share of that joint venture, and the plan is to spin that out, and Firefinch shareholders will receive an in-specie distribution pro rata to become a holder of 2 bits of paper effectively. And I think those businesses do belong separately. Gold and lithium are quite different spaces. People will get the choice to hold one or other or both, but we're convinced we're building 2 substantial businesses here, and if we get it right, they should be billion-dollar businesses each. And we're at the start of that process, but it's very clear to see the path ahead and how that value gets created. We've got steps ahead to consummate the demerger. We've got to put a new board and management team in place for the lithium spinco, but all those wheels are in motion, as are the discussions with Ganfeng, our partner, in terms of value engineering and optimizing the project ahead of what will be a front-end engineering design period and project planning period, hopefully getting onto the ground to commence construction in the first half of 2022.
And absolutely, I mean, as you mentioned, it is a very sizable project at Goulamina with some very high grades and low costs. Do you want to go through some of the key numbers there?
Well, grades are about 1.4% LiTO. We're producing a 6% concentrate, very clean, and there's no question that's what will have attracted Ganfeng. They're obviously a downstream processor, one of the biggest in the world. I think they're the largest lithium chemical company in the world, market capitalization of $25 billion US. So they obviously were interested in the offtake and building a long-term partnership with us. Clearly, as a junior company, our funds, when we were developing the feasibility work and drilling this out, were constrained to demonstrating a critical mass, which we've done, but we certainly haven't fully exhausted the regional potential here. So I think there is upside for Goulamina in the future, but those sorts of production numbers, that 460,000 tons of spodumene concentrate, that's already a sizable first step into the lithium game. But I think once production has reached that steady state, the opportunity to grow is definitely real. And if the trend that lithium supply demand is on, that'll be a very obvious step for the company to look at.
And a 26-year mine life is not a bad place to start.
Yeah, and as I say, once you sort of start into production and processing, there can be a parallel resource reserve development and optimization strategy running alongside, no question.
Absolutely. And both of your projects, obviously, in Mali. Mali as a place to operate. What are your thoughts on that?
Well, I've just come back. I flew over there last couple of days in May. Spent 2 weeks on the ground. Most of it at Marilla, but we did make a trip down to Goulamina and met with the community and some of the regional administrators down there, and then also spent a couple of days up in Bamako meeting with the ministries. But there has been a degree of instability in Mali for some time, but the mining industry carries on unaffected to the largest extent. We also made a visit to some of our peers over there, and some of them who have been operating for decades. Marilla has operated for 20 years, largely unaffected. So the politics is one thing. If you come from Australia, where obviously I'm based, I find it hard to throw rocks at people for political instability, given how many prime ministers we've had in the last 10 years. So if there's changes happening there, that's one thing. But in terms of the regime, the fiscal and regulatory regime that you're operating under, we don't have any particular complaints or concerns. We're bringing a lot to the table now as Firefinch. 12 months ago, Marilla was looking like it was closing. Goulamina, had some potential, but we were not in a position to take it forward. But we are today. So fast forward 12 months, Marilla's got a whole new lease of life. Creating jobs, bringing back the flow of royalties and taxes, and we're about to replicate that at Goulamina. So those are the cards that we bring to the table when we're sat across from the ministries of mining and finance, who are very supportive. They see the future, and they're our partner. They own 20% of Marilla, and in time, it's almost certain they'll own the same level of ownership in Goulamina. So you've got a genuine partner there, someone who's committed to the future of the industry, who is shaping to be, Mali's shaping to be the first lithium producer in West Africa. And that's to say another card and another feather in our cap as Firefinch. And we're obviously not complacent about that. We've got some good relationships in country, and our country management are very well connected to the ministries in Bamako. And we'll be going back as regularly as we can. Obviously, COVID travel constraints are a bit of an annoyance at the minute, but they won't stop us continuing to go back and build on those relationships.
You mentioned you just been on a trip over there, or recently in June.
Yeah, in June, so 2 weeks, probably one of the best site visits I've ever undertaken in my career. Obviously, seeing it all for myself, putting things into perspective, both spatially and in terms of the work that was underway, and then just meeting the team for the first time. And it's all very well doing it over Zoom, but meeting people face to face, and many of whom have had a long history at Marilla in particular, and then meeting the Goulamina community and understanding how committed and optimistic they are about the future down there. I certainly came away with renewed enthusiasm for Firefinch's future and for the future of Marilla and Goulamina.
Excellent. Well, you've got a lot of activity ahead for the company with the ramping up of Marilla and then the demerger and spin-off of the Goulamina project. But thank you very much for joining us today, Mike, and we look forward to hearing some updates going forward.
No question, Leo. We won't be shy in keeping people updated, but so far so good. I think we're off to a great start, but the future looks very bright. Thanks.
Fantastic. Well, thanks for speaking with us today.
Cheers, Leo.